Hey guys, welcome back to Be Rich. Today we're going to be talking about the US market and opportunities for value investors in global markets because yesterday the S&P 500 closed about 125 points lower than it had opened, and it was quite a bloodbath in America. And if you look at the 1 year performance of the S&P 500, the index has gone up only by 2.95%, which compared to the average S&P 500 performance year over year over the past few years has been close to 7% short, in the sense that generally the S&P 500 returns about 9% year on year, and this past year it's only returned 2.95%. And just in the past 1 month, the index has fallen by 10.57%. So this is not a small decline. This is quite sizable. If you look at the year-to-date performance of the S&P 500, the index has fallen by 12.10%. So these aren't small numbers, and this basically means that there's a lot of panic surrounding the US presidency with Donald Trump in the seat of power. And you have about 2 years until the Federal Reserve governor, which will basically see Jerome Powell retiring, and we'll see the new one being appointed. So it's going to be interesting to see what happens in the upcoming months. But before we jump ahead, the main development over the past few days has been the fact that Jerome Powell has jumped in during one of his Chicago meetings, and he has said that, look, the Federal Reserve is in a wait and see mode. They're going to figure out what's the direction which President Trump wants to take with his tariffs, because just over the past 2 weeks, we've seen Liberation Day. For those of you who are not in the know, Liberation Day is basically Donald Trump's tariff day, where he basically applied a huge amount of tariffs across the board. And I think he put a 25% tariff across the board on all countries, regardless of the amount of tariffs that we have put upon the US. So, one of these countries being our own India. So, he then gave a 90-day pause for every country apart from China. And he said he's not willing to be the first to move on the Chinese tariff issue, and he wants Xi Jinping to come and negotiate on the tariffs first. He doesn't want to make the first move. And China has imposed retaliatory tariffs, and they have said that, look, we are not going to be the first to move on this. And there's basically a situation where there's a trade war going on between Trump and China in full fold. And we're also basically seeing a situation where China has now advised its partners, its trade partners, that, look, Donald Trump is doing XYZ in the US, and this is the current situation or economic climate. And if those of you who are our own trade partners start to impose tariffs on our exports to you, then there's going to be hell to pay for. So this is China's negotiation with its trade partners. And on the other side, you have the US sitting and saying that, look, if you do not impose tariffs on China, then the US is going to impose tariffs on you. So on both sides, it's basically two giants who are fighting, and a bunch of countries are stuck in the middle. The Chinese economy, which already, though it performed decently in the last quarter, but the point is that in the long run, the Chinese economy seems to have a lot of trouble with its population declining as well. So we'll have to see how far China is willing to take this, and we'll have to see how far Donald Trump is willing to go. And basically, it's a situation of chicken, where we have to see who's willing to cave first. Now, given all of this, Donald Trump has been quite vocal in his critique of Jerome Powell. He said, Mr. Too Late is too late in raising or rather cutting interest rates. And he has threatened Jerome Powell, saying that, look, you better cut interest rates right now because the economy needs it. Jerome Powell says, look, it's not up to the Federal Reserve to be able to assist your fiscal policy, because their main prerogative, or rather their main objective, is to control inflation, and their secondary objective is to look at labor market situation. So, given that the labor market situation and inflation are their main concern, it's going to be difficult for Jerome Powell to see what's going to come when Donald Trump is flip-flopping on his policies, as he has been over the past few weeks. Now, given all of this, the S&P 500 has also been flip-flopping and seesawing between ups and downs, and we've basically seen a market where people don't know how to think about this, where to invest, and how to basically make any sense of this situation. And as soon as Trump had critiqued Jerome Powell, we basically saw that the market fell by over 2%. So, given all of this, as value investors, the question is, what is the main takeaway? Well, the main takeaway of value investors here should be, what kind of bargain purchases can we look for? If those of you who are watching this video are wondering, is can we make a play on the S&P 500? It's fallen, quite a bit over the past 6 months. There might be some value purchases to be made, and maybe the S&P 500 will recover, because some of you may believe that Donald Trump is not as serious as he appears to be about the tariffs which he's imposing. That is speculation. We do not know what's going to happen. But if we are value investors and we're investing for the long run, there are a few places which look sort of attractive as long as we're careful about where we go. So, what are some of these places? Some of these places include, but are not limited to, the automotive industry, the consumer segment. These are basically the segments that are heavily getting battered by the tariffs. And let me be clear, this is not an endorsement to go blindly purchase any car company that is listed. Neither is this an endorsement to purchase anything. I'm merely discussing the facts. The fact of the matter is, Donald Trump has placed antagonizing tariffs on the automotive industry and has basically told them that, look, if you want to sell cars in America, either pay the duty or manufacture in America. It's going to take a long time for car manufacturers to be able to build up capacity in the US, and by the time they even get to that stage of building capacity and trying to do something, you'll basically have a situation where Donald Trump would have been done with the second term. So it's going to be left to watch as to see whether car companies are going to respond by creating jobs in the US. So this seems to be quite a murky situation for investors looking at this industry. But however, there have been a few automotive stocks that we've discussed on this channel before, which we are personally considering, and this is no endorsement for them. You may choose to do so as you wish. But we have been considering Subaru, and this is something that we've brought in our company analysis and we've made a Substack piece about. Do check the Value Observer for the numbers. But from where we talked about Subaru, things have become cheaper, because Subaru has fallen from a PE ratio of 5, close to 5, to about 4.5 now. And the dividend yield has gone from about 4% as of the time of recording that video to now 4.5%. Subaru is a company that has a very healthy balance sheet. They have more short-term cash in hand than they do have liabilities overall, the debt that is. Now, what does that imply? That basically implies that tomorrow, if the situation gets sour for Subaru Motors, as it possibly might be with tariffs being applied, Subaru makes a lot of their money by exporting cars to America. Yes, their earnings could take a hit, but the point is, they have the cash to be able to handle or withstand a lot of what Trump is throwing. And for that reason, we've been considering Subaru, and we believe that given the market has hit Subaru even harder now, it makes even more sense to purchase a little bit of Subaru here and there to be able to basically gain a little more exposure when the stock is out of favor. Right. If you want a more detailed analysis of Subaru, do check out the company analysis. Next, we've also looked at companies like Toyota. We've looked at other car manufacturing companies in Japan. And these are basically value purchases where the balance sheet is quite strong and they have the ability to withstand what Donald Trump is throwing at them. Again, let's be clear. Things could go very wrong before they start going right. Let me paint a picture for you. Tomorrow, Trump could decide to take up his tariffs even further because he feels like his position is being threatened and his dominance is being threatened. And it's very possible for Donald Trump to go on another rampage where he takes up tariffs. And it could also mean that in the worst case scenario, he decides to clamp down on imports of cars for the time being. It's sort of far-fetched, but the point is, given what has already happened, I don't know. we don't know what's going to happen. If such a situation happens, it is quite possible that companies like Subaru take a huge earnings hit. This is a risk that I am personally comfortable taking, and I would advise anyone and everyone who are investing to take their own smart decision when they do this. However, all things said, it makes sense to look at pockets of value. Second, I talked about the consumer segment. I talked about the consumer segment because a lot of these consumer products are, in fact, manufactured in China and then imported back into the US. Now, the fact of the matter is, these Chinese tariffs, which that is the tariffs that have been placed on China, basically make it very expensive for these companies to continue following the strategy that they've been following. And rightly so, the market has battered the stocks of these companies. Now, not all of these companies are going to be great companies. However, you again do have pockets of value within these companies, and it makes sense to consider some of them in small amounts to be able to get an exposure in the US market. There are some opportunities there. One such example is Nike, which has fallen by about 16.72% over the past 1 month alone. This is quite a sizable fall, and it's still trading only $4 above its 52-week low. So you have these pockets of value here and there everywhere. Now, again, Nike is another company that's going through its fair share of trouble. Nike has quite a lot of challenges. It receives a lot of business from its sales in China, and China, as we know, has been struggling. The economy has been struggling. Consumption is not as high as it should be. And we also see that there are now tariffs, and there's an additional challenge which has now been priced into the stock. However, the brand recall is amazing. It's a company that I've always wanted to purchase and own, and it's a company that we have decided to take a bet on. The point of the matter is, there are multiple opportunities in such situations to accumulate companies which otherwise we would have been unable to. Nike, about 2 years ago, was trading at a PE ratio of 30, 32, 34. The point is, these kind of companies we were unable to look at just purely because they were very valuable back just a few months ago, that is just a few years ago, but now have come into value territory simply because they're going through some challenges. We personally believe that some of these challenges could be overcome, and we decide to punt at it. However, the point is, there are other such value buys. Even if you do not see Nike as a value buy, you will be able to find out other opportunities, and you'll be able to basically make some money off of this. The point of this entire video was to suggest that yes, the market is going down, and yes, there's a lot of uncertainty going on, but as value investors, there happens to be pockets of value everywhere, as long as we're willing to spend the time to look. Now, given that I've mentioned a few names, and given that we've talked about some examples of value available in both the Japanese market as well as the American market, my only request is that the people watching this video do their due diligence, look at the annual reports of the companies that I've mentioned, look at the annual reports or the 10K reports in the case of Nike, and do look at what investors like Benjamin Graham, Warren Buffett, Charlie Munger have written, so that you can learn to build conviction for yourself and you can figure out what sort of value buys seem attractive to you. Because at the end of the day, we all have to build our own conviction in what we purchase. Tomorrow, it could very well be that Nike gets battered even further if the China and US trade war goes further. It's also very well possible that Subaru, Toyota, all of these other companies get battered as the trade war between America and the rest of the world continues. So things could get a lot worse. And I do not know how you would be able to stomach it unless you were to build your own conviction. So this is a call to action for those of you at home to take up the copy of Intelligent Investor next to you. And I hope that you have a copy of the Intelligent Investor next to you. If you don't, I recommend you purchase a copy. It's quite inexpensive, but very worth it. And I hope that this video has been insightful, helpful. And if you want to see content adjacent to what I've talked about right now, do leave it in the comment section below. But otherwise, thank you for watching. Be rich. Like the video. Please subscribe, leave a comment, and share it with your friends and family members if you think they have some value to gain out of this. And finally, thank you once again for joining us on Be Rich.